Good morning. 2020 Form 4562. Depreciation and amortization. Can you depreciate your home office? If you have a home office and you use it exclusively, there is a rule behind that to recoup the cost, to claim the cost of business use of your home. You have to use that space exclusively for your business. So if you are a sole proprietor, you could either use the simplified method or deduct your home office, to deduct your home office or claim the actual expense. So if you choose to claim the actual expense, you could claim the depreciation deduction of your home office as well. So we are going to use an example here to demonstrate how you will calculate the depreciation on your home office. So we are going to assume you have 1,000 square footage single family home and you use a room that is 100 square footage as a home office and qualify to claim the deduction for that. So you decided to use actual expense and claim the depreciation of your home office. So how do you calculate the depreciation deduction for your business use of your home? Your home office is in a single family home. Therefore, it is considered as a non-residential property. You will depreciate it in 39 years. So we are going to assume you start using a space in your home in 2020 as an office for your business. So we are going to figure out a few things. What is the purchase cost of your house? And what was the cost of the land? You'll find out improvement costs to the house as well, assuming you own the house before 2020. So what is the market value of your home in 2020 when you convert a piece to business use? So to calculate the basis for your home, you'll use the lesser of the cost of your house at the time you purchase it minus the cost of the land plus any improvement you made to it during over the years, and the market value of the house at the time you convert a bar to a home office. So you take the lesser of the two as the basis for your home. So what is the basis for depreciation for your home office? Is going to be that basis for the house times the square footage you are using for your home office divided by the square footage of the house. So that's one way of calculating it. Sometimes you might use the number of rooms, and sometimes it might be easier to just use square footage. So the basis for your home is, in this scenario, will be the basis for depreciation of your home office will be the basis of your home times 100 square footage divided by 1,000 square footage. As an example, if your basis for the house is 100,000, the basis for depreciation of your home office is 10,000, which is $100,000 times 100 square footage divided by 1,000 square footage. So we are going to use the depreciation spreadsheet to record our assets. So in step 1, asset name home office. So date of purchase of the house, we can assume is January 1st, 2014. Total cost $100,000. The land $20,000. So the cost without the land is $100,000. So date placed in service, January 1st, 2020 is when you start using 100 square footage of it for your business office. So percentage use is 100%. Therefore, the market value or basis is going to be that 100,000 times 100 square footage divided by 1,000 square footage. And we use the cost of the house, because purchasing a house in 2014, by 2020 it will have increased in value. That's the assumption. Therefore, the lesser of the two will be your purchase cost, since there was no improvement to it. Okay, so let's continue here. And the cost associated with the business use is going to be the 100% business use times that 10,000, and the business and investment use is going to be the total of business use and investment use times that 10,000. Keep in mind that the depreciation spreadsheet is a general spreadsheet for depreciation. Is not for home office. So if you are using a space in your home for business, you better be using it exclusively for your business. You do not claim a business office for investment activities unless it is your trade or an active business activity. So just keep that in mind. The spreadsheet is for depreciation, not particularly for home office, but it's especially for a non-residential or real property, and it could be used to depreciate your home office if you are claiming actual expenses and depreciation of your home office. So section 179 and special depreciation 50%, they are now going to apply. So the basis for depreciation here is going to be the business and use cost minus section 179 minus special depreciation, and the property class is non-residential real property. So when you convert your home office to your a piece of your home into a home office, you could complete the top part of step 1. So now let's use Appendix Publication 946, Appendix A, and Publication 946 will be, the link to it will be under free download on NASOP.com. Okay. So Appendix A, and the latest version so far is 2019. They have IRS has not released 2020 yet, so but you can still look on their website to see if they have it released. So Appendix A, we will use chart 2. So use chart 2 for residential, rental, and non-residential real property. Okay, so what are we looking for here? We want to find the rates table that we will use. But before that, we want to take a note of few information that we will use to complete Form 45-62. So depreciation system, we want to use GDS, which is General Depreciation System. So that's the first column in chart 2, and that's what we want to use. We'll take note of that. Depreciation method, and you only have one option, straight line. We could go to Form 45-62, Section B, Part 3, Section B, and you'll notice it for non-residential real property, they have two spots for us, and the first one is 39 years, and the convention is mid-month, and the method is straight line. So we could even copy that from the form to our spreadsheet to have good record of that for later. So the recovery period 39 years, so GDS 39, and the convention is mid-month. And I believe it's already in the column E already, convention for 19I row. So what else do we need for our spreadsheet? Okay, so month or quarter placed in service, it was January. So the table, so knowing those information, let's go find the table that we should use in Appendix A. The spreadsheet does not come with rate table. It comes with a table to calculate the depreciation deduction after you entered the rate. So you have to use publication 946, the latest version, to find the rates and enter in the depreciation spreadsheet. So we want to use GDS. The depreciation method is straight line. The recovery period is GDS 39. I don't know if you are looking at it here. Is second row, is pretty much third row. So we need to be looking at that row. GDS straight line, GDS slash 39. So GDS 39, mid-month convention is non-residential real properties. So any month, okay? So the table to use in row 3 is A7A. A7A. So we'll take note of that on our spreadsheets so that we can remember. So now that we are ready to depreciate the home office, the home office will is the name will just carry here for us, and the depreciation deduction, by the time if you calculate it right, the total for all the years should equal the basis for depreciation of the home office. So your role will be to copy the rates and enter in the expression, the depreciation expression for each one of the years. So table A7A, let's go look for that table. We'll just scroll down past page 69 and we'll pass multiple rates, looking for table A7A. So table A7A, non-residential real properties, mid-quarter convention, straight line, 39 years. So we need to look at the row for the months you place it in service, and that's the top row. And January is the month we place it in service. That's why it's good to keep a good record of the assets, the depreciable assets you use in your business. So month placed in service is January. We took note of that, and now we will look at the rates under the month properly placed in service, which is 1. So we look at the rate there. So for the first year, the rate is 2.461%. For the second year all the way to year 39, you'll use the rate 2.564%, and for year 40, you'll use 0.107. So you'll depreciate in 40 years. So we are going to copy those 3 rates to our spreadsheet, and I believe the first year 2020 is 2.461%, assuming you start in 2020, and the year 2 is 2.564%, 2.564%, and year 40 is 0.107. So let's go. You'll notice that 2.564% is all the way to year 39, and then we have year 40, 0.107%. So once you enter the rate, the spreadsheet is going to calculate the depreciation deduction for every single year, and as long as your basis does not change, it's going to stay. It's going to the rate, the deduction is going to stay the same. I mean, it's going to be what you calculated originally. So having a set, every year you just take the depreciation deduction for that year, for that tax year, and put it on your business, claim it on your business tax return. So how the depreciation deduction is calculated here. So if you want to manually calculate it, or you want to know how it's calculated, it's taking the basis for depreciation of your home office, which is $1,000, and every single year is taking that 1,000 multiplied by the rate for that year. If I just jump to year 13, you'll notice that it's taking 2.564% times 10,000. And if I click on year 1, the depreciation deduction was 2.461% times 10,000, the basis for depreciation. So that would be $246.10. And from year 2, which is 2.564% times the basis for depreciation of your home office, which is 10,000, and is going to be $256.40. And you are going to deduct, depreciate the business office by claiming 256.40 from year 2 all the way to year 39. And year 40 is 0.107% times basis for depreciation 10,000, and it is $10.70 year 40. The depreciation balance. So by the time you are done depreciating, calculating the depreciation deduction, the total will be that 10,000. So we have the total on top, and if it's not total into the basis for depreciation, then you copy the wrong rate, or you might want to double check the formula to make sure the formula is not broken. So depreciation balance is going to be The first year is going to be 10,000, the basis for depreciation minus the depreciation deduction claim in year 1. So the basis is going to be, the balance is going to be 9,753.90. For year 2 is going to be the sum of year 1 and year 2 depreciation deduction subtracted out of that 10,000, or it's going to be that 9,553.90, the depreciation balance minus 256.40, the depreciation deduction from year 2. You can do it that way as well. You can take the sum and use the basis for depreciation, or you can use the balance minus the depreciation deduction for the year you are calculating the balance for. And by year 40, the depreciation balance should be 0. Because year 39, the remaining balance will be $10.70, and year 40, you'll take that $10, you will claim that $10.70, therefore the balance will be 0. So now that the depreciation balance is calculated, you'll enter the tax year. So the first one will be 2020, the second one will be 2021, and so forth. You could also drag the date all the way down. It might calculate it for you right away, or it might just copy. The same one. So if you copy the same one, it'll have a little arrow requesting, giving you the option of arrow fill. So we click on that little one, and we will, because the one that is highlighted is copied cell, so we want to fill in series, and that will just fill the tax year for us with the right year. And I'll do the same here. I will fill up the series. So you'll be done depreciating the home office, assuming you are still living in the house. You'll be done depreciating your home office in year 2059. Or you'll stop claiming the depreciation when you stop using that space for home office, whichever comes first. And that's how you calculate the depreciation for your home office. So for year 1, the depreciation deduction is 246.10. 246.10, because it's the first year, the non-residential real property, the month and year placed in service is going to be January 2021. We'll go in column B, 19I, or the full date, January 1st, 2020. Is that 21? Anyway, January 1st, 2020. The basis is 10,000. The year you are going to depreciate it is 39. And we can just put 10,000. We have the convention main month already filled out. Method, depreciation method, straight line, and the depreciation deduction that we calculated was 246.10. And I don't think you'll need a sense here, but you can still check the instructions. So 246, and that will be how you will complete Part 3, Section B, for the first year when you depreciate your home office, assuming you are claiming the actual expenses and you want to depreciate your home office. Thank you so much for your time. And the depreciation, so the depreciation of non-residential real property, you can keep a good record of your non-residential real property using the depreciation spreadsheet. You complete step 1, and then you complete step 2 using the Appendix A, Chart 2 of Publication 946 to find the rates. Once you enter the rates in the rates column, the spreadsheet should be able to calculate the depreciation deduction and the depreciation balance. And then you complete tax year. You keep good record of your assets. Therefore, every year you just have the information to pull from your spreadsheet and enter it in the business tax return. Thank you so much for your time. We have links to the Form 4562, instruction to Form 4562, Publication 946 under free downloads at ninasoup.com. It will be under federal forms and instructions. You don't need to subscribe to access our free downloads. We thank you so much for watching our videos. We thank you very much, you all that subscribe to our channel, and we thank you very much for all your comments. Thank you for reading our blogs. We do have a category, how to depreciate a business asset, where there will be articles related to depreciation topic, and we have video playlists 2020 Form 4562, where we'll have all the videos related to how to depreciate your business asset and how to complete Form 4562 on our YouTube channel. Thank you so much for listening to our podcast as well. I'm Afiavi Ojune Liberman, creators of Liberman Consulting L.L.C. YouTube channel, Liberman Consulting L.L.C. podcast, ninasoup.com, our blog. We do have our online store, liberdownload.com, for digital products, template, spreadsheet, PDF to help you manage your finances and your business successfully. We have custom apparel and stationery, including office supplies at liberlabel.com, resell products at liberoutlet.com, and natural products, natural soap, towels made out of natural fibers at ninasoup.com. Thank you so much for your time.